Awesome. So we are live right now. This discussion is about filing your 2018 taxes in April of 2019. The new tax reform will not be affecting your 2017 taxes. So just a brief introduction. We're here with Rochelle from Chandler and Knowles CPAs.
Hi.
Hi, how are you doing today?
Good. How are you?
I'm doing well. So why don't you start off by telling us a little bit about yourself, a little bit of Chandler and Knowles.
Well, we've had the practice since 1996, and we are a full-service accounting firm. We do business taxes, individual taxes, and our main goal is to help taxpayers reduce their liability.
Very cool. Very cool. So today, again, we're just going to be talking about the 2018 tax reform, its changes, some of the main points that taxpayers need to be aware of. Again, this isn't something that is going to be affecting your 2017 taxes. This is something that you need to worry about when filing your 2018 taxes in April of 2019. So just to start off, who will this new reform really affect?
It will benefit business owners more than individuals. What I have found is that in looking at some of my clients and their situation, the non-business owners, some things are being given to us like lower tax rates, but some things are being taken away from us like personal exemptions. And a lot of people are left in a neutral situation, which is, I guess, a good thing instead of it impacting them negatively.
Yeah, I mean, neutrality is always good. So just to start, we're going to start with some basic questions about the reform, and then we're going to move on to any Q&A. For our audience listening, feel free to go and ask along any questions that come to mind as we do this. All right, so we're going to get started. So the first question, what should I do today to prepare for my taxes with the new laws?
I would do an analysis of it. It's a case-by-case situation. There's no real general statement you can make about the impact on individuals. So you've got to take a look at the things that are going to change for you on a case-by-case basis, and I would recommend getting with a tax professional and having them take a look at it for you and help you with that.
Awesome. So I itemize my deductions every year, and I live in a state with high taxes. How will the tax changes affect me?
Well, property taxes, sales tax, and or state income tax are all going to be limited to $10,000 a year. So if your property taxes are already like $8,000 or $9,000, and your state income tax is more than a couple of grand, then it is going to increase your taxable income on the federal level. So that's a good thing to take a look at and see if you need to have your withholdings changed, either the state withholdings and or the federal withholdings.
Awesome. I heard that medical deductions were changed this year. Can you tell us a little bit more about that?
So medical deductions have to be more than 7.5% of your adjusted gross income. So if you have AGI of 100,000, you've got to have more than $7,500 in medical for it to begin to add to your itemized deductions. Well, in 2019, that's going up to 10%. So wow. Yeah, that's going to reduce your itemized deductions potentially, but the majority of my clients don't typically have enough medical expenses anyway, which I guess is a good thing. So that might not impact a lot of people.
Okay. That's good news. So how has the standard deduction changed, and how will it affect taxpayers?
It has nearly doubled. For example, like a head of household, the standard deduction was about $9,000 before, and it's going up to $18,000. And for married filing joint, it was a little over $12,000, and now it's going up to $24,000. So for many taxpayers, that might mean that they're not going to even itemize anymore.
What is the difference between the two different deductions, the standard versus the itemized?
So you calculate each and you see which one is larger. So if your property taxes and mortgage interest and charitable contributions, for example, are, if you're married, if those are all more than $24,000, then you'll take your itemized deductions. But if it's less, then you'll get the standard deduction of $24,000.
Oh,
that's going to be beneficial for a lot of people.
All right, that's really good to know. Will I have to pay Obamacare penalty next year? We've seen this question a lot.
That is going to be in effect through the end of 18, but that's the last year.
Oh, okay. Okay. So how has the primary mortgage interest deduction changed?
The limit in the past was if you had a mortgage balance of more than $1 million, you couldn't take the interest for that portion, but that's been grandfathered in. So the new law says it's a $750,000 limit, but that's only for new loans. So if you had a loan of $800,000 before, it's not going to impact you. It's basically on new loans in excess of $750,000.
Okay. So how, I guess, long-term effect, how is this going to affect the taxpayer's current loan that exceeds the new limits?
So let's say that they went and got a new loan tomorrow for $1 million. They'll be able to deduct 75% of the mortgage interest, and the rest will be, just not deductible.
Oh, okay. That's easy to understand then. So can taxpayers still make IRA contributions and then simultaneous conversions to Roth IRAs?
They can no longer do that.
Oh. Okay. So we have a situation that was proposed to us. This person wrote, I'm looking for a new position for a job, and I have two offers. One offer is offering a W-2, and the other is offering a 1099. With the new law changes, which one should I choose?
I would go with the 1099. That way you then qualify for the new business deduction on flow-through income, which is a 20% deduction on your net income. So that's definitely going to be extremely beneficial for businesses. So if I were looking at W-2 versus a 1099, I would definitely go the 1099 route.
Okay. That's good to know. So moving more onto the business side now and how businesses are going to be affected by this, what are some of the biggest benefits that these new law changes are going to have on businesses? It
is the flow-through deduction. Again, simply put, it's 20% of the income coming from the business. So if it's, say, that's $100,000, you get to take an additional $20,000 deduction before you calculate your income tax.
That's awesome. So now on the opposite side of that, what are some of the drawbacks that this new reform is going to have?
One of the things that the IRS took away was entertainment expenses. Not every business has that, but for those that do, of course, that will matter. And an error was made. Right now, meals are not deductible. I have a feeling that will be corrected, fixed, so to speak, and meals will be deductible. But right now, entertainment's definitely off the table, for sure.
Okay. And then entertainment would be entertaining clients, taking them out, showing them kind of company culture.
Yes, for example, maybe there's a business meeting that's held, and then afterwards you go out to play golf. And so the golf will not be deductible any longer.
Okay. Well, that's a little disappointing, but understandable. So now the big question, should I do anything in 2018 to reduce my liability?
There are things that you can do to reduce your overall liability. There are strategies, structures, and products that combine the benefits of both IRA and a Roth and have a lot less rules than, say, 401ks or IRAs, where you can't take out your money until you're 59 and a half without the penalty. When you draw the money out of the IRA, it's subject to ordinary income tax. The Roth is opposite. You don't get a deduction for the contribution, but the income comes out tax-free. So there is a tool that you can use that you can receive all those benefits. So when you have more tax benefits, you're going to end up with a better result for yourself.
Wow, that's really good. That's really good.
One thing I thought of when we were talking about businesses and individuals, back on the individual level, a deduction that has been taken off the table is non-reimbursed employee expenses, which that's not going to affect a lot of people. However, if there is a person working for an employer and they do have auto mileage, home office, and maybe some travel expenses that are not reimbursed, those are no longer going to be deductible at all. So that I have seen that to have a negative impact on some taxpayers.
Oh, huh. So we have our first question from one of our viewers. His name is JJ. Hi, JJ. So JJ wants to know, have the new tax laws changed the way we enter information into QuickBooks? Has QuickBooks changed software to accommodate this change?
I haven't seen QuickBooks make a change. For example, they have an account that is automatically created called Meals and Entertainment. Well, now you're going to want to break those out because hopefully meals will be deductible, whereas entertainment won't be. But that is a very good point, about the devil's in the details. So you've got to keep the books according to the new laws. Depreciation has a lot of changes around it as well. Okay. So it's important for a business.
Okay. So Tony just wrote in. Tony wants us to elaborate on the entertainment expenses. He asks, is buying a customer lunch or dinner considered entertainment expense and therefore not deductible as an expense for a company?
That would fall under meals right now. And again, it's an error that the IRS didn't intend. Meals currently are not deductible, but I do think that we're going to see a technical correction to that. And so meals will be deductible. I do not think that they will change the rule around entertainment, which again would be golf always comes to mind, and or I'm not coming up with it. I'm not thinking of a good example. It could be just going to a Dave and Buster's afterwards, or there's some company trips that could include horseback riding, zip lining, kayaking, on and on, the list goes. So anything that is fun is not going to be deductible.
Can't be rewarded for fun, right?
Right.
He asks, what about cocktails? Cocktail hour, hitting up happy hour.
That falls under meals. So hopefully that will be deductible when they come out with the correction.
Now, do you foresee them coming out with a corrected reform anytime soon?
I don't know when they will do it. I have a feeling hopefully what they'll do is they'll go all the way through this whole new law change and find all the things that need to be fixed, because that's not the only mistake they made. They did this in a rush. They turned it in handwritten.
Well, that's never good. Just off the top of your head, what are some other noticeable changes that you're seeing that people are kind of like taken aback by?
Well, we're all going to lose our personal exemptions. So if you're married and no children, that's 2. But if you're married and you have 4 kids, that's 6. So that's a big number. They are adding back better child tax credits. So it's a teeter-totter. There's good things and there's bad things. And so hopefully, and again, what I've seen, the majority of the time that I analyze a client's tax situation, it's coming out to be very close to what it was before, with the give and the take.
Very, very.
Yeah, it's a good thing to know, though, because if it's going to be something that causes you to owe $3,000 or $4,000 or $5,000 more, it's good to be prepared for that.
Yeah, definitely. We have another question coming in. So what about marriage penalty? Is that still alive, or is that dead and gone?
It's dead and gone, thankfully. So yes, you can get married now.
Oh, thank God. So before this tax reform, what did that penalty look like?
Well, let's just say that there are 2 people, they were single, and they took the standard deduction. So they both got a standard deduction of whatever dollar amount. Well, within married filing joint, it's not like the standard deduction was both of those added together. It was less, for example.
Okay. So is there anything else? Like, I know obviously you're your biggest advice would be definitely see your tax professionals before time runs out, and obviously. But other than that main advice, do you have anything that you think it's absolutely pertinent that people need to know?
I think people just really need to know on their own individual basis how this is going to impact them. And the IRS has now reduced the withholdings that are coming out of people's paychecks. So if indeed you're neutral, like I've been saying, I see that often, but the withholdings are now going to be lower, then at the end of the year, you could potentially owe money when typically you get a refund just because of that dynamic. So I think it warrants making sure you understand what's going on so that there's no surprises. A question I get from business owners are, should we change from an S Corp to a C Corp or to a partnership? And the answer to that is no. C corporations they have a great tax rate, but there's still double taxation. So S corporations, partnerships are still favorable over a C Corp. So I've gotten that question a lot, and I haven't seen a situation where it makes sense to change your business structure. Thank goodness.
Okay, that's good. So for people that don't know, what are the benefits of working with with local CPAs or your tax professionals?
Well, I would say, of course, we strive to prepare the taxes very accurately. We want to make sure we take advantage of all the deductions that somebody has. But I think the big difference is in the planning. So we do tax planning, which encompasses some financial planning, asset protection, estate tax planning, and knowing how to. We all want to take advantage of all of our itemized deductions or all of our business deductions and so on and so forth. But those are what they are. The planning to actually reduce the income tax, that's where the real, I think, value comes in from our firm. Is how can we lower your tax bill?
Mm-hmm. Well, that's always good. That's always good. So do we have any other questions from our viewers that there's dying to know information? I know we covered some pretty good topics here, but there's always more that we need to know about taxes. It's vital in everybody's life. So just to refresh, we went over how the new tax reform is going to affect taxpayers, and it's not something we have to worry about paying your taxes this month. Remember, they're due April 17th, guys. This is something that's going to affect when you pay your 2018 taxes. You file your 2018 taxes in 2019. So we hit up how we should prepare for the new tax rule, how medical deductions are going to be changed, how itemized and your standard deductions differ. We talked about Obamacare, the penalty of mortgage interest deductions, some of the biggest benefits and some of the drawbacks to being a business and having the new changes come out. So just any closing notes from you, Rochelle?
I am thinking through the mental checklist. Again, I think the most important thing is to make sure you know how it is going to impact you so that you don't end up with some unpleasant surprise next spring. Okay. So just for all of our viewers, how do people get in contact with your team for more information? They can call us or email us. Our website is chandlerandknowlescpas.com. Our phone number is 817-430-3000. My extension is 101. Awesome. Well, thank you so much for sitting down with us tonight and really getting into the nitty gritty of this new tax reform. I'm sure a lot of people are going to benefit from this. I think so. Thank you. No problem. All right. Have a good night, everyone. Bye.